Hello everyone, my name is John Paul, DayTradeToWin.com. Today is Monday, April 6th, 2020. I have a live webinar that is going to cover a lot of different things. Trade Scalper, Atlas Line, I'm going to show you all the signals, explain to you the profits, the stops, look at price action and the ATR. So we're going to look at a lot of different things. If you like these videos and if you find them informative and they actually teach you something, please subscribe to the Day Trade to Win YouTube channel. And that way, whenever we have new videos and new information and new techniques to show you, you'll be the first to know. That's the Day Trade to Win YouTube channel. If you have any questions about the upcoming mentorship class, just email me, support@daytradetowin.com. Let's start the webinar. All right, good morning, everyone. So just do a quick sound check here. Alex, good morning. We have a good group of people in the room. Before we begin, remember that trading is risky. Obviously, I want everybody to be careful when they trade, understand the risks, and then talk to your broker. We do help and offer simulated trading. So we want you to practice and want you to understand how the markets work before you dive in. But when you do decide to trade live, just remember there are risks involved with trading. Hey, Holly, can you hear me okay? All right, so what I want to do is I want to make sure that we look at the current conditions that are in the market. I'm going to add the Trade Scalper to the chart so you can see the signals. We'll look at the signals on the Atlas line. Just give a broad overview of what we're looking at as traders every morning. So if I add here the Trade Scalper software, this would be, and click apply. And okay, we have some signals here. Okay. So the first few signals that we have this morning here, you can see on the Trade Scalper are long here and short here. So I want to first focus a little bit on the best times to trade and why sometimes you need to be a little bit careful when the market is starting the day session or the Asian session or the London session just for the first 5 or 10 minutes because there's a large spike in activity that occurs where right as the market opens, which is for me, remember we are now Eastern Daylight Savings Time, EDT. So at 9:30 New York time, which is right here, we have a big spike in the market volatility, which is everybody begins to buy and sell because the bell rings. And so you have here this spike here in the volatility right here. Now, this is not a bad thing, but it is a cautionary tale that we have to be aware of because if you are thinking the market is slow, as it is here, and then all of a sudden it begins to wake up and there's a lot of trading activity, your small stops are going to be a hindrance. They're not going to help you. So when I look at the first 5 or 10 minutes, I typically try not to jump in the market because I'm concerned with the flip-flop and the big swings and the spikes that occur. So we have here a slower type of momentum or activity where each candle is roughly about 1.5 points. And I would have to say that's normal. 1.5 points, 2 points, 2.5 points. It's not a bad thing. But then all of a sudden the bell rings and you see that these candles get larger and the ATR is a function of that. And the market begins to wake up and your small stops are going to take you out very easily. So let me talk a little bit about the ATR because I see here there's a lot of questions. Joe, can you hear me a little bit better? Here I turned up the sound as well. And by the way, I don't do recorded webinars. I do live webinars. So if anyone thinks that this is a pre-recorded webinar, it's not. Okay, you can ask questions. You can pick my brain a little bit. All right, it's not a pre-recorded, it's a live webinar. So what we're looking at here is each candle, as you see it, has a prediction of moving 4.5 points. Okay, so looking at this as an example, I can expect what you're seeing from this high to this low, the market could move 4.5 points. So if I have a very tight stop of 2 ticks or 3 ticks, that's going to take me out very fast. It's not going to keep me into the trade. So just the basic up and down movement of the market. So that's something we have to be aware of. And that's the reason why the first few minutes, as soon as the bell rings, that having a tight stop under those conditions is not going to help you. And believe it or not, the same thing happens the last half hour of the day where a lot of traders are trading on margin and they have to exit the market the last half hour of the day. You're going to see a spike in volatility, and these candles get larger as all the traders begin to exit the market right as the closing bell occurs. And so you have a problem. You can't trade right into up until the close. You should stop trading about 45 minutes, half hour leading up to the close, and that way you won't get stuck with the big whipsaws as traders begin to exit their positions because they're only trading on margin. The other thing I want you to be aware of is news events. And so I have a news indicator that I offer for free, and I usually provide it for 6 months as a trial for free unless you're a DayTradeToWin member. And so I'm going to add here the news indicator. If you haven't downloaded it already, you can go ahead and download it, and you can see for yourself here the type of news that we have upcoming. So right now, it's only on April 9th that we have unemployment claims that we have to be concerned with. Everything else here, there's not any news that we should be concerned with. And this is constantly changing. It changes on an hourly basis. If there's any news that's going to come out or reported, this will update instantly for you. Okay. And you can actually go there if you want to find out where it is to download that. It's actually here, in case you were wondering. You come down here to under free stuff and downloads, and it's right over here, the trader indicator for trader 8, and you just download it there. All right. Now, sometimes you may have to provide us your machine ID to validate the license, so you email us with the licensing information with your name. And I also have here directions on how to do that under setup and info right here. This is the section to explain how to license and activate, install and add indicators. So we try to provide as much information as possible here under setup info. Okay. Now, as I wait for a signal to appear, I also want to know what the market has been doing the last few days. And this may not, or I should say, you may think about every day being a little bit different, but in reality, days happen in groupings. So if yesterday was a very volatile day, I would expect that today and the next few days are going to remain the same. If the market is slow, the same thing is true. You can expect a cycle or a grouping of days to be slow. So when you look at yesterday and the day before yesterday, it gives you a clear prediction where you can count on it, but you can definitely say to yourself, yesterday we had a lot of volatility and the market will be and continue the same. Or yesterday was very slow. I'm going to expect the same type of slow. Or yesterday was a normal day where there's nothing happening. So I want you to think about days happening in groups and in cycles. So if I come here to a daily chart and I look at the daily chart here on average, you see that the volatility is increasing, 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 and now it's beginning to slow down. We're possibly getting back to normal here. Now, this still is a lot of volatility, so I'm not suggesting that things are normal, but things are getting a little bit slower, and each one of these candles, each one of these days are going to be relatively similar. Just like each one of these days are relatively the same size, they're very large days, the same thing is going to happen. We're going to have similarly what we see here, about 126 points of movement that is potentially going to occur. So you have to consider that the last 4 days as a grouping is going to give you a prediction of what you can expect into the future. So just something to consider. Always know what type of environment we're in before we decide to trade. Okay. So I know I have a feeling that the market is going to get back to normal as long as this gets slower and slower and slower. So the other thing I want to do here, if I go to a 1 minute chart, is I'm going to look for something that's going to give me an edge when I trade, whether it be your own methods or if you're using the Atlas line or if you're using something else. I like to look at when things are in alignment. I don't like it when things are confusing or there's something telling me long or there's something telling me short. And I like to see everything long or everything short. So if you're using your own methods to trade and you're saying, should I take this scalp trade? And your methods and your ideas are telling you, yes, whatever they may be, are telling me long, and you have a long signal, that's a good thing. And the same thing for short. But when you have multiple things indicating long and short, it's very confusing. There's also a position in the market called staying out. So I would recommend that you stay out of the market if there's anything that's confusing and wait for the better signal. You don't have to always trade and be into the market. Markets love to test and trade where they've been. And this is a common theme about markets. So you can see that the market traded here to this low today so far. If the market comes down, I would expect that it wants to test this low. And the same thing if I look back here and I see this high or this high up here, I would say markets love to test and try for that. Okay, so you see here a signal here to go long at 25.79 quarter that just appeared. Okay, so 25.79 quarter or within a tick of this would be your entry to go long. Anyone have any questions? The software just gave a signal 25.79 quarter to go long. This would be the signal to go long. If you enter at market or if you chase this market, try to get within a tick or two. Don't chase it where you're getting very bad fills. But this is the entry right about there. Does anyone have any questions? For the long signal 25.79 quarter. All right, Joe, can you hear me okay? And Holly and Brian and Alex and Wes, everybody else? All right, good. Okay. Now, what about stops and targets and all that good stuff? Well, if I look here at the ATR, remember, I have a lot of videos, over 100 videos probably, just talking about the ATR, and probably 1,000 videos everywhere else. So if you look at the current conditions, which are about 3 points, 3.25 points, this tells me very specifically that this next candle or this next candle or this next candle, let me make this a little bit bigger here. Okay, so this next candle right here is going to be on average 3 points. What that tells me and what that means is that my stops cannot be smaller than this value because it could very easily go down 3 points before it goes up in your favor. So if you're trying to trade under these conditions, look at the ATR, understand the market is slow, the market is fast. I can expect the movement of the range from high to low to be 3.25, 3.5 points. My stop has to be a little bit larger than that just to keep me into the trade. Now the target, I'm a little bit more conservative on the targets. You can do a 1-to-1 ratio, 3.25 points based on the ATR. You can. But I always think that if I'm able to make 3/4 or half of that ATR and get out of this trade with profit in my pocket, you're much better off. So if I look at 3.25 points or 3.5 points, hold on a second here, and I'm only looking at 3 points or 2.5 points or 2 points, if I'm only looking at that small target, I would say to you, take it and be consistent and don't always try to go for the much larger home run. I rather take the smaller targets consistently and trade less. So if you had 2 or 3 trades for the day at 2 points or 2.5 points, you can see that's already 5 or 6 or 7 points, and you should be finished. You should not continuously trade and trade and trade and trade, because eventually it's going to bite you. It's going to get back at you, and you're going to give it back. Uh, okay. Bill says here, why does software make a long call at 9:40? Well, that's the internals of the system, Bill. Okay, so the system works on an algorithm of price and time, and so I'm not going to give you and tell you why the system made a long here. If you want the software, you can go ahead and follow it, and it teaches you why in the manual as well, why this happens. Anyone have any questions? We're not looking at indicators. By the way, the Trade Scalper and the Atlas line and everything that I teach, the roadmap, the blueprint, all these methods that I offer that are available in mentorship, they do not focus on any indicator. And that's really important, because if you look at most systems or most trading methods, they are all looking at moving averages or MACD or stochastics or RSI, or there's looking at these all of these indicators that exist here, right here. So I'm not looking at using any function of any of these indicators. I'm just using the ATR here with a setting of 4. So I'm using the ATR with a setting of 4 to tell me what I can expect in price movement within the next 4 candles, whether it be a 1-minute chart, whether it be a daily chart, whether it be a 5-minute chart, which I really like, but it's too volatile. I don't trade a 5-minute chart under these more volatile conditions. So I'm dropping it down to a minute. I'm using the one of the day trade to win methods here, which are all based on pricing and time. They don't have any optimization. By the way, if you take a look here at the trade scalper back end, you can see that there's not a setting, or there's no setting for a value. There's no setting to say today use a setting of 50, for example, or tomorrow use a setting of 25, and the day after that you have to update it and re-optimize it because it's not working, and reset it to 100. So there's no indicator linked with a value like a moving average crossover or stochastic or whatever. There's nothing that's linked to it. So I think that's important to understand. I don't like to use indicators, conventional indicators. I like to use what you're seeing as the chart, the candles, price, the time, patterns to help me understand the market itself. Now I'm going to add the Atlas line as well. But before I do, just so you can see here, if I use a 1-minute chart, you can see that this is 5 points or 5.25 points. This is getting a little volatile because of this one big candle. If the conditions continue or persist to be about 5 points or higher, then I want to drop down my time frame. So I'm relatively risking 3 points or 4 points, but I'm not risking more because the volatility is higher. So if I just change this here to, let's say, a 10-second chart. Okay, so this is a 10-second chart. The volatility is 2 points. So the volatility is now more in line with the risk that I want to be involved with when trading. And so the signals will be based off the ATR 2 points, stop and target. It should be relatively the same. Maybe you're using a day session, or I'm using 24-hour session. Sometimes if we right click on the chart and choose reload all historical data, it updates and fixes Bill bad tick or bad trades. So it's always good to do that if you have your chart open for some time, just to reload any bad data that may have come in. Okay. So remember, I said to you earlier that markets love to test and trade where they've been. I see the market that stopped up here. If I look back here, you may find that in history, the market came to this place back in history, and it's most likely testing this area. It could be further back than the data that I have, but this also tells me that for right now, we have this as the high of the day and this as the low of the day. So you have to now focus on when the market comes down to here and it gives you a signal, it's on its way to test this. So any signal that you have here that's going short, it's going short with the intention of testing where the market has been. And this is a very simple and common theme that you should be considering. Sure, markets love to break through and not only test highs or test lows and move beyond them and break them, but the first time they lead into that, I always consider that a test, like a double top or double bottom. And so just be careful if you have a long trade. You have to consider that the long trade is really just testing this high. It has to go through it just to make it more of a value, that it's not no longer respecting these highs. It's uh, blowing through it or breaking through it, and the long trade as it continues higher is good. But if it's a long trade just in front, okay, just in front of this here without breaking through it, it could be just a test. So you should be aware of that as well. Yep, I have a 1 minute chart. I switched back to the 1 minute chart, Holly. I had a 10-second chart a little while ago. 10-second chart right here. And I switched back to a 1 minute chart. All right, let me add the Atlas line as well. Here again, if I add the Atlas line, the only thing I have to update is for my time zone where I live. So I live in the New York Eastern Standard, Eastern Daylight Savings, EST, EDT time zone, so 9:30 for me. And the colors can be adjusted and everything else can be adjusted. So I'm going to click OK over here. And you see here, this is the Atlas line down here, and this is giving me signals to the long side. So this signal for the trade scalper is coinciding with the Atlas line, also long. Now, it's not to say that every signal is going to be long or is going to be good, but for the most part, what we've seen at this point, the pullback trades, the strength trades, they're all indicating long on the Atlas line. Signals for scalping will also, in my opinion, be good to the long side. If things change and we see the market starting to go down and down and down and down and down, once it crosses back down below the Atlas line, which is actually below this lowest low here, you're going to start seeing more short trades. So we are focusing on long trades at the moment. And it says here, how do you adjust the ATR indicator on a range chart? Well, a range chart will not function the same way using the ATR, because a range chart, let's say that you have a range of 1 point, right? 1 point. So a range of 1 point, which is 4 ticks, will always be, Nader, 4 ticks, right? So if you can think about this, like every candle that you see will look like this. So the range is going to be 1 point for this, 1 point for this, 1 point for this, 1 point. It's not going to change. So you can't adjust on a range chart the ATR because it's always going to be the same. Does that make sense, Nader? If I added here a range chart, I like a 2 range for the trade scalper. So if I added here a 2 range chart for the trade scalper, which is very fast, you're going to see, let me just adjust this here, that remember 2 range is what I'm using, right? So if I use here 2 ticks, this is 0, and so 2 ticks would be right about there. Oh, there's a long trade here, 25.9750. So this is a long at 25.9750. Okay, so going back to your question, every single is right here about 2 ticks, right about there. Every single candle is being 2 ticks, right, on the range, and that's all it's going to be. It'll never reach 3 ticks. And so 3 ticks is here. And it'll never reach 2 ticks. It'll always be 2 ticks, always. Every candle is 2 ticks. Does that make sense? Yep. Hey, Dimitri, can you hear me okay? Testing, testing. All right. So that's to answer your question about the range chart. Now, I like the range chart, but we see that these candles, they start moving very fast because the volatility is faster. So using a range chart, even though it's a good idea, it's because the market's moving so fast and the volatility is faster than normal that it's hard to jump in. In this case, what we saw was the signal appeared and the market was able here to give us the entry, 25.9750. So in this example, it wasn't bad or it wasn't that complicated to get in, but expect for a fast market once the signal appears that it starts to go and go really fast, and it's I think harder sometimes when these candles are flying by to jump in. So I like the 2 range chart. I recommend it for scalping, but the volatility, these candles are just moving so fast that it's harder to trade for that reason. Does that make sense to everyone? Okay, so Nader, you're good with the range chart. Dimitri, you can hear me. Bill, I think you're good. All right. All right, very good. Glad you got that signal. Listen, a point and a half is better than nothing, so I'm glad you got that. You don't have to hold it for more. Let me just switch back here to a 1 minute chart. All right, so I have the Atlas line, I have the Trade Scalper. One thing I didn't put on the chart yet was the ATO2. I can add that as well. Not that you have to trade every single method all at once. I'm just giving you the examples and showing you the software working. Okay, so the at the open 2 is also indicating long, right? So let me see if I can expand this out here a little bit. Okay, so the ATO2 or the at the open method here is indicating a long signal here and a long signal here. 25.9675 would be the entry to go long, and the market went up. Typically, I like to use time-based stops for the at the open, which is 4 candles, which is, again, time. We're making our decisions based on price and time. So after you enter long, it would be 1, 2, 3, 4 candles to make the target. The target being 4 points. So from here to here, the market made 7 points. Now, I don't know it's going to make 7 points. I can only say to you, the market's going to make on average 3.5 points. Well, really 3.5, yeah, 4 points, 3.5 points. So that's all I could expect. So I'm not suggesting 7 points was your goal. I'm suggesting that this is your goal, even being a little bit more conservative. If it's 4.25, go for 4 or 3.75, for example. Use a market if touched order and get out of the trade. No, so Holly, we have a couple of things going on here. I'll remove everything off the chart and I'll add everything one by one, and I can show you the signals one by one. Okay. So I have everything off the chart. So the first trade of the day is usually a scalping trade because it starts as soon as the market opens here in the morning at 9:30. So the 9:30 is for me where this market opens. So if I add the trade scalper, right here, we have the signal that we saw. Here, the long, another long here. This is on a 1 minute chart. So the trade scalper is just spitting out signals, just scalping signals. Go long, go short, go long, go short. The Atlas line is a little bit of a longer time frame where it plots a line. It could be plotting a line here above, or it can be plotting a line here below. But the Atlas line is looking at saying go long when price is trading above the Atlas line, or go long when the market is trading below the Atlas line. So if I remove this here, So this is the Atlas line down here. And it's giving long trades. It's telling you this is an Atlas line long, this is a pullback trade, this is a strength trade, and this is a pullback trade which failed right here. This pullback trade is a losing trade. So this is the Atlas line so far. If I remove the Atlas line and I add the ATO, right? Again, same thing. The market open for me is at 9:30. I don't really have a sound file or anything. This is the at the open method, indicating to go long here and then to go long here. So I progressively added these indicators to the chart to show you how they build upon each other, or if they're conflicting, or if one is saying long, one is saying short. That's not a good thing. We want to see everything going in the same direction, long or short. Not that you have to, but it's always better to have some confirmation. So these green lines that you see here are the at the open method, ATO method. Holly, let me know if you're okay with that. So three separate individual methods displayed. Okay. Okay, so going back to the Trade Scalper, and I'm showing you this more because there's more signals to show you. So this here, this double wick long signal here, going back to, I think, I forgot who asked me the question, Bill maybe? Asked me, well, why does that signal happen? And this signal is based off of wicks right here. This signal here, double wick long, is based off of wicks. The wicks are pushing higher. It's based off of the price pushing higher and pushing higher, and it creates the signal called double wick long. Now, you can see the market went down, right? Double wick long, 25.9675. The market went down. And the market went down 3.5 points. So if I look at the ATR, I'm coming back to this because this is important. If I go back to the ATR and I see what the movement of the market could be, you can see that it's exactly 3.5 points, which leads me back to the original instruction in the beginning that I said you can't have a stop that is smaller than the ATR, because doing this type of deal before it goes in your favor is just something that you have to expect may happen. You can't just say it's always just going to go straight up and in my favor. So you have to look at the current conditions of what the market could move in distance and utilize an idea for a stop that's based off of that. So if my stop was 1 point, I would have been stopped out, and the market would then go in my favor. Again, you see where the market went, 3.5 points, pretty much the same 3.5 points, 3.75 of a point expectation. So my expectation when this signal appeared was that, well, I want the market to go long, but I have to have a stop that is a little bit larger than what it could do to keep me in the trade. I have a target as well, a little bit more conservative than 3.5 points, let's say 2.5 or 3, and you're in. You didn't get stopped out, and you should be out of the trade by this point. Anyone have any questions on how I'm using the ATR, the average true range, to help me dictate the stops, to understand the targets, to understand that when the market is slower, I adjust to smaller targets and stops. When the market is more volatile, I adjust to a little bit larger targets and stops as well. But at the same time, I don't want to be crazy and risk 10 points, let's say. You don't want to do that. You should really cap your stop at the maximum of 5 points. All right, so Dimitri has a very good question. So how much money do you need to withstand the swing? So we're going to discuss what is, let me just forward this to everybody, Dimitri. So the question is, you can see it there, how much money do I have to withstand? So if you're looking at this, in this particular example here, 3.5 points. So 3.5 points, you're looking at roughly $200 to $300 in your account to withstand this trade. $200 would be 4 points. So if my stop was 4 points, which is right here, then your stop, the maximum risk that you would afford in this trade, because it's a little bit more than the current ATR, would be $200. Now I think you should even have a little bit more. So that's why I think between $250, $300 would be the maximum risk on this trade, because it would be roughly 4.5 here or 5 points of stop that you would have, which is much more to keep you in the trade during the swing. So that's to answer your question. But this is this example. Another example, when the market is slower, so let's say that you wanted to trade when you have here, the ATR is just 1.25. Well, under 1.25, you don't have to risk $300 or 4 points or 5 points. You just risk 2.5 points. You risk half of that. So this would be only $150 risk because the ATR is slower. At the same time, your target would only be 3 ticks under these conditions. So even here, if you look at this signal here, right, the ATR is 1.75, right? I'm rounding down to the nearest quarter point. So the maximum risk that you should have in this trade is, say, 3 points. So 3 points is $150 on this trade. The target, 4 ticks. So you would risk, in this example, 3 points because that's what the ATR is telling me. And I want to be out of this trade within the next few candles. The market went 3 points. So I'm not saying take 3 points. I'm saying take a point or point and a half and be done. This is the dictation that tells me what to expect and how to proceed. Dimitri, are you okay with that? Okay, Joe. So when you use the range chart, and I'll just switch here to a range chart. Let me go to a range chart here, to a range chart. So this is a range chart. So every candle, every single candle is 2 ticks. So this candle is half a point or 2 ticks. This candle is half a point, 2 ticks. This candle is half a point. So you see how fast these candles are moving, where it almost seems like within a second or two there's a new candle. A second or two there's a new candle. Now, it's not a bad thing that we have candles, but it is harder to enter into the trade or enter into the market with a good fill without slippage under these faster conditions, let's say. So if you look at a range chart and you see how fast these signals are moving, and the signals that you're getting, you see the signal and then you try to enter, but you can't, right? Because it happens so fast that the trade takes off without you. Like, for example, there's a signal right here. Do you see as soon as this signal happened, it just started to take off, started to run away from you, let's say? When there's really, well, I can't say there's no chance, but it just happens so fast that you can see you don't want to chase it at this point because you're not chasing something that has already made a move and has already made profit. This is because we have faster than normal volatility. Within 10 seconds, you see how many candles it already moved and plotted. So Joe, let me know if you're okay with that, understanding first on how fast these candles are moving and trying to enter without slippage, because slippage is your enemy, right? You don't want to think that this is the price, but yet you get this entry here at 2600. So under these conditions, you have to say, well, I'm not able to, on a consistent basis, enter without slippage and get the price that I want. So that's when you would switch to a 1-minute chart where you would look for signals that are slower, where the signal appears, and then you have an opportunity to actually place that trade in a reasonable time, see yourself get filled, and then manage it for the next 4 minutes. So it's because of the volatility. Now, the ATR being 3.5 points on a 1-minute chart is not a big deal, but if you look at that same volatility on a range chart, these candles are moving very fast. So really to answer your question, if the ATR is above 2.5 points, if the ATR is above 2.5 points on a 1-minute chart, just stick with the 1-minute chart. If the ATR is less than 2.5 points, I think you're safe to trade on a range chart. That way, when each candle on a range chart of 2 ticks appears, you have the opportunity to get in without the slippage or without chasing it. So we're here now about 3.25. Use a 1-minute chart. If this gets slower and slower, use a range chart. And Joe, if you do have questions, just email me, support@DayTradeToWin.com. Send me a chart, and I'm happy to explain further. All right, so a few signals today here. Explained the ATR. Looked at the ATO2, was good. Looked at the Atlas line, a few opportunities to the long side. No, Dimitri, you can trade the Atlas line on a 1-minute chart. You can use any chart that you want, right? But um, I'm using a 1-minute chart because if I looked at a 5-minute chart, which I prefer a 5-minute chart, the ATR, let me go to a 5-minute chart here, 5-minute, and I bring back the Atlas line. So you can see that even though it's giving me a signal here for the Atlas line at 25.94.50 up here, we have a few problems. The first problem that I see is this ATR at 10 points or 9.25. If I was to place a trade, I know that this distance that the market could move against me could possibly be 9 points. There's no way I'm risking 9 points on a trade, right? Or 10 points or more. That's the reason why I switched to a 1-minute chart. The rules are the same, whether it be a 5-minute chart or 1-minute chart. Nothing changes. We're not altering anything. It's just because the ATR is more manageable here on the Atlas line, 5 points, let's say, that I could actually place a trade. Well, not really 5 points, but right there, about 4 or 5 points. I can trade with a little bit less risk instead of looking at these huge swings with a 5-minute chart. Now, this is not normal. We're going to see the market get back to normal levels. Then you can go back to a 5-minute chart, Dimitri. But you can trade a 1-minute, even 30 seconds if you wanted to, 10 seconds. So the Atlas line can be traded in any market. And you can see that the signals are continuing to go long. There's another trade scalper here at 2603.75. So 2603.75. Right here is the entry. So if you're entering long at 2603.75 and the ATR, you can see here, is at 3.75 of a point. If my stop is 2 points, I can be in trouble. If my stop is 3 points, I can be in trouble. But if my stop is a little bit larger than this, when I'm filled, the market can go 2 or 3 points if it needs to before going up in my favor. That's the reason why I'm using the ATR. So I understand how much stoppage or protective stop to use and not just winging it or using the same value on every single trade, because it doesn't work that way. Because I can see the market at 3.5 points. I move some of this stuff here. I know what my stop is going to be. Now, let's talk about a target. What would the target be, guys? If you look at this current situation now, about 3.5 points, what would be a good, solid target? Who wants to, and this is live market too. If you're comparing it to your chart, obviously there's a little bit of a delay of me sending you the broadcast. Just a second or two, maybe. Who wants to talk about the target? So 2603. What do you say? 2 points? 2.5 points? 1 point? 2604.50? Okay. 2604.50. Target. So if your target is 2604.50, which is right over here, 1.25, then you should have already gotten that. Right, Dimitri? Now, I am going to say that because the ATR is at 3.5 points, cutting that in half is at least a good starting point before you begin to trail a stop. Hopefully you enjoyed this live presentation. We covered the Atlas line signals, the Trade Scalper, the ATO2, all live as they were happening. If you have any questions, we have a contact us page, and we also have the dates listed for the next mentorship class. We record all our training and we provide lifetime licenses. So this is a benefit for those traders who want to learn and are serious about trading price action. My name is John Paul. Until next time, and be safe out there.